Off.
Okay, recording now.
All right. Hello, everyone. Welcome to today's Informational Friday presentation with Bales. My name is Dave Thomas. I'm Vice President of Sales and Marketing. And today's topic is planning for supply chain conversion with financial considerations. We'll be discussing why supply chain conversions require coordination between finance and supply chain, how your decisions impact purchasing, accounts payable, and finance departments. And this session will provide an overview of the conversion options with the finance impact on that should be considered. We welcome with finance and supply chain users. Before we get started, and if you're not familiar with Bales, I would like to take a second to tell you a little bit about us. We've been in the Infor ecosystem for over 26 years, and we are entirely Infor focused. We do nothing but Infor implementations, upgrades, managed services, and support. We support all aspects of the technology, including S3, Landmark, and Cloud Suite, including the HCM, Finance, and Supply Chain Management suites. In fact, we've been recognized and given partnering awards in 8 out of the last 10 years, and Bales is also one of the only women-owned businesses supporting the Infor S3 and Landmark products. Our consultants bring 15 years of consulting experience in the space, with the equivalent in professional experience. Some were former benefits managers, compensation managers, directors of supply chain, as well as former controllers and CFOs. Again, we'd like to thank you for joining us today, and let me introduce your presenter. Casey, take it away.
All right, thanks, Dave. Thank you for the introduction. Good afternoon and welcome, everyone. As Dave said, my name is Casey Burge. I am the Supply Chain Practice Manager and have worked with the new Infor Cloud Suite Finance and Supply Management software, which is also referred to as V11, since 2017 here at Bales. And so this topic came to fruition after I was hearing from my peers that there has always been these challenges with supply chain conversions and the financial impacts that they have. There seems to be, some difficulty in planning since you need both sides of the organization to do this. So you need both finance and supply chain. That can include a lot of people, and you got to get them all on the same page to tackle this topic. So I understand, why this may have been difficult in the past. So I started working with my counterpart, Lisa Watkins. She is very passionate about this topic, and, she's also the practice manager on the finance side. So we were on a project together, and we started talking about how to work through some of these challenges. How can we help prepare our clients for this type of discussion? So she taught me more than I ever thought I would need to know on the accounting side. I probably taught her more than she'd want to know on the supply chain side, but we worked together here to create this presentation that we have to show you today. And we hope you find it beneficial as you yourself might be preparing for a Cloud Suite Financials implementation as well. So we do have a disclaimer that the material is in reference to the Infor V11 Cloud Suite Financial System, and it's not meant to show you how to do conversions, just plan for them. And this information is, this is just for informational purposes only. So we want to provide you with the considerations as you make the best decision for your organization. All right, so to get started, we certainly cannot stress this enough that supply chain conversions should be coordinated between finance and supply chain, since these decisions made by maybe your purchasing and your inventory control team could impact the accounts payable and will impact the accounts payable and finance department. So you really don't want one area making the decision without an agreement from the other. So making decisions in a silo is gonna probably lead to some dissatisfaction at go live, which we definitely want to avoid here. So the level of effort by each department should definitely be considered when looking at these decisions.
I only got one email afternoon or around noon actually. I think I was in a meeting and then as the email came in. Yeah.
Brian, are you able to mute? Hello? Okay.
Oh,
great.
yes. Okay. Okay, that would be nice. Do they do recordings like
and anybody that just hopped on, if you don't care to mute yourself?
Oh, good.
There we go. All right. So the level of effort by each department should be considered, and the decision made, maybe by one side could possibly lead to burden on the other team because maybe that decision wasn't made or considered all the way across the suite. So again, it's Badal's, mine, and Lisa's recommendation that you start reviewing the options as early as possible. And I'm not sure if anybody on this call is in the middle of your implementation or upgrade, but the sooner that you can consider the options that we're going to discuss, we believe the smoother your go live can go. Okay. So what are some of the common challenges with supply chain conversion? So the number one we hear from clients is getting clean data from the legacy system. So whether that is the Lawson / Infor system or just a totally different product, it seems to be you get purchase orders that are created that end up staying in this open status because there was either difficulty with receiving or there was issues on the payable side matching the proper PO with the invoice. But in general, we usually see a lot of purchase orders that need cleaned up in the legacy system. So if you are coming from Lawson or Infor system, then we are familiar with the forms and programs to extract the data out. But implementations that we've done with other products, the data in the system just may not provide the same information or be the process the same as it is in Infor. So you definitely want to note that might be a challenge as you prepare for this. Another challenge is just the discrepancies between invoices and purchase orders and the receipts that exist. So with existing open buyer messages or reconciliation messages, we need to know how we are going to handle those because they will impact the status of the purchase order or receipt depending on the type of message that you have existing, okay? So we have to talk about those. A keynote, and if you've gone through conversions, you may have seen this before, but on the financial side, there's a flag that says, do not impact the GL. So that's pretty nice when converting GL balances separate. But on the supply chain side, you cannot convert inventory items without impacting the global ledger. So you do have to have a plan in place to accommodate that. More than likely, you'll be converting your GL balances, which is going to include those inventory items. Okay, so that's a challenge. So in Cloud Suite Financials, all purchase orders are going to be assigned a new Infor PO number. So we cannot use that legacy one, but what we can do is put it into a reference field, which will create the crosswalk. And then you can assign that number during conversion. So if the purchase order is not going to be converted, but added manually, the user has to know that they need to populate that reference field with the legacy PO number. Otherwise, it's going to take time to track down what that legacy PO number is in the new system. And anybody ever working in a warehouse knows that this is huge when it comes into receiving into the warehouse, because if the receiver cannot track down that legacy PO number, which is what is on their packing slip, that's what they have to go off of, and they can't pull up the new PO number in Infor easily, they're going to have to stop what they're doing, track down somebody that can get them that information, and it's just going to delay receiving, okay? And for those of you that are existing Infor users, you may use PO codes to group your purchase orders together. So I've seen that done to group capital POs together or service purchase orders together. But in Lawson, you used to use that PO code to assign a numbering sequence to help you identify the type of purchase order pretty easily. PO codes are still available in Cloud Suite. However, they don't allow you to do smart numbering based off that code, okay? They're just informational. And then another challenge is going to be your item type from your legacy system. That could change depending on if you're implementing contract management or not. So for example, you only have to build an item now in the item master if it's a stock item, so sitting on one of your inventory locations, or if it's an item sitting at a PAR location. So if it doesn't satisfy either of those requirements, then you can add it to a contract as a special, and now you no longer have to maintain an item master record. So I've seen clients move all their non-stock items to specials, so that now though, when converting, we have to make sure that the item type is what is going to be in Cloud Suite rather than the legacy item type, or you're going to run into some errors when we do those conversions. So again, just some challenges we've seen as we've done this. All right, so before we go into the different options for conversions, and we've already identified, again, some of the challenges there might be, I also want to put out some assumptions along with some definitions, just so that we're all, on the same page with how we came up with these options. So converting open POs and receipts should be completed before full physical inventory to reduce the need for adjustments. So this is assuming that you have inventory items on your open POs and receipts that would have had an impact on the GL. So for example, we'd recommend that you would convert your open POs and receipts, you journalize inventory control, and then you would complete a full physical inventory to correct those inventory balances and journalize again, okay? So if you do the full physical inventory first, then convert your open POs and receipts, you still would have to do an offsetting transaction to take that inventory back out of the system. So you're adding another step to the process. And just so everyone's aware, converting inventory items will have the date of conversion since we can't add those inventory items in the past. So example, if you're doing a conversion on January 1st, or did one maybe on January 1st, 2020, that's the date that the inventory is going to look like it hit the system, even though you may have actually received that purchase order back in, November 15th, 2019. So, an option that you have is that when you convert that line, we add comments to the inventory items to show the true date they were received. But then also you may have access to your legacy system, so you could look that data up that way as well. We're also going to assume that during conversions, the structure relations will remain on. So meaning that you will already have defined your valid account and accounting unit relationships to what your future dimensions are going to be. So this is going to ensure that the data you convert for supply chain will meet that criteria and you won't end up with error suspense after the fact, okay? And then just a few definitions. So we have learned over the years that what one area considers quote unquote open is not the same definition that another area has, or even different levels within the organization could mean different things. So an open PO line in Infor, this is what we take the definition to be. An open PO line can be for an item that has not been received at all, okay? Or an item that has been received but not yet matched, okay? So that is an open PO line. An open receipt are items that have been received into the system but have not been matched to an invoice, okay? So when we refer to the term open, meaning open POs or open receipts, that's the definition that we're referring to. Okay, and then now we're going to go over some of the conversion options we have. So we call this first one a full conversion. So we convert all open POs, even if not received, and open receipts. So this is typically what we see on a statement of work, where we're converting all open POs and receipts, and then, usually happens, we get into the process and we find out, oh, well, we didn't mean that we were going to convert, POs that were 10 years old, that are still open. So again, we have to be a little bit more detailed into what that line actually means, open POs and open receipts. But so an example of what I would do if we were converting all open POs and receipts is if we have a purchase order with 200 lines, okay, 100 of those lines have been received and not invoiced, and the other 100 lines have not been received at all, we would still convert all 200 lines, okay? So there are going to be pros and cons to each of these types of options, okay? So for the pros, obviously, this is going to, for this one, open POs and open receipts, a full one, and the cutover is going to be a pretty clean cutover of legacy data. So the received not invoiced GL balance will tie to your conversions because you brought over all your open receipts, okay? The effort that it takes to do this is all prior to go live. So we're not carrying over the effort to subsequent periods after go live, which is a really, really nice benefit here. For purchase orders that have partial receiving at the time of cutover, we will have the ability to have both converted legacy receipts and new receipts assigned to the same PO since we converted it. So there's not going to be this stopping and starting during the receiving process since all PO lines were converted into the new system, okay? So there are some cons, though, to this type of conversion. The level of effort, like we talked about, some of the challenges, the level of effort it takes to get the clean data out of the legacy system. And an example being those POs that don't have a financial impact in your current system. So maybe there were no receipts, but the PO itself is open with lines. It's not causing any financial issues, but it's just so old that you just ignore it. Every time you run R&out, you just, or every time you run an open PO report, you just ignore it. So now we have to identify those types of POs that we don't want to bring over, or we could end up bringing hundreds or even thousands of purchase orders that we didn't really mean to convert, okay? So we're going to have to take some time into identifying the ones that are valid and not. And another con is going to be the amount of time it takes to map the distributions for all those open PO lines to the proper GL object and GL structure, which must be finalized before this process can even get started, okay? So this is definitely going to be a consistent, con or, issue amongst all the options, because we're going to have to map our distributions. If you're taking advantage of the new functionality or taking advantage of the new opportunity to redefine your system instead of just a lift and shift of your current setup, this is going to be a point for all of the options that we have, okay? So the next option we have is a partial conversion, and a partial conversion is to convert open POs that have open receiving only. So for example, this purchase order I've been working with. So my PO has 200 lines. 100 of those lines have been received but not invoiced, and the other 100 we said had not been received. I only am going to convert the 100 PO lines that have receipts, okay, for this partial conversion. I'm going to ignore the other 100 that have not been received. So the pros to this type of conversion is that it's going to bring over a smaller volume of POs, and it's really not going to require any cleanup of legacy POs that did not have receipts, since we're only bringing over the ones where there's a GL impact. Again, the GL impact will be addressed at go live without carrying over to subsequent periods, and the legacy received not invoiced report can be validated against the converted items, so we can capture everything and make sure it made it in, okay? So the cons, there's going to be cons again. Is going to be the level of effort it takes to get the clean data out of the legacy system, and again, the amount of time invested in the mapping of distributions, which can't be avoided. But now we're going to have another con with the partials, because we have to have resources available after go live to manually build POs and receipts that come in without a converted PO, or we're going to have to update the existing N4 PO that were converted for receiving. So from the example that we've been working with on this 200 line PO where we only converted 100 lines because we only had receipts for those 100, that means we still have another 100 lines of goods to be delivered. So a day, a week, a month after go live, each time these items are shipped off the legacy PO, the receiver is going to have to stop receiving, find a buyer or somebody else with that security to create a new PO in the system. And then, like we said, they're going to have to make sure they reference that legacy PO number in the reference field when it's built, and then they have the receiver go and continue receiving. If that PO was actually converted, just those lines weren't converted, the buyer or someone still has to stop, add those lines, and then hand it over to the receiver. So regardless if they're creating a new one or adding to an existing one, there is a gap there where a process has to stop. So, and not to mention, not pointing fingers, but if it's go live and the buyer has a stack of purchase orders that they need to create because there's skids or pallets of products sitting in the warehouse, they may not go and check the legacy system of what their PO was. They're just maybe going to go off what the packing slip says, and that's what the vendor is shipping. So if they don't go look at the original PO in the legacy system, you do run the risk that you're going to receive product that you didn't order, or a quantity that you didn't order. So there does have to be that validation, and when it's go live and you're getting pulled in a million different directions, they may just be tempted to create the purchase order based off that packing slip. Another risk we run here with this type of conversion is that we are not going to show items on an open purchase order in the new system. So if you have reorder information in place for your stock items and you run the inventory vendor reorder advice to replenish your stock on hand, it's not going to take into account the items that you have on PO because we didn't convert them. It doesn't look like they're on PO. So you could actually end up ordering more stock than you expect, okay? And then the last conversion option, which has to be done, and we don't see a way around getting inventory receipts into the system, is when you would only create open POs for the inventory items with open receipts. So you are just ignoring your non-stocks, your specials, and your services. So about the only pro we can see with this, this option is it's the least amount of items to convert at go live, okay? So maybe the smallest effort. But the cons are going to remain similar with the level of effort it takes to get the clean data out of the legacy system and the amount of time in mapping the distributions. But the big one here is the ongoing manual process that it's going to happen for AP and receiving for all those items out there that didn't get converted, okay? So we are going to walk through those manual processes in just a moment. But these are the 3 different conversion options we've identified. So manual processes. So let's talk about some of these, and then you know, on the call, you may have some other ones that you'd like to share, maybe that we don't, that we didn't bring up. So please feel free to take yourself off mute and let me know if there's anything maybe you've experienced as well. So there are considerations that we need to have about doing the manual processes. And like I said, we've seen a variety of these, and by no means is this an all-inclusive list. It's just what we have experience with. So if you recall that the only option that is not going to require any kind of manual process is if you do convert all your open POs and receipts. If you're not going to bring over all the open receipts, then your received not invoice balance, the RNI balance, needs reconciled. So are you going to be closing receipts in your legacy system, or are you going to use spreadsheets? How are you going to maintain it to get the proper financial reporting done? Okay. If you are going to be receiving for old POs, where is this going to be done? You know, will they be built in the new system as they're needed? Another consideration for invoice entry, how are you going to perform a manual match? So if you didn't bring over all the receipts and the invoice comes in, am I going to manually look something up to make sure it matches? You know, how are you going to walk through that process? And then, you know, the time it takes to do the mapping of distributions for that invoice, if you didn't bring the PO over from the spreadsheet, how is that going to work? So how are you going to get that mapping and that crosswalk? And then another question should be asked, and this is regardless of, you know, probably conversions, is how long are you going to have access to your legacy system? You know, especially if things haven't been converted, but how long are you going to have access to go look that data up if you needed to, okay? So these are definitely some things you want to keep on your radar and talk through to help assist you in identifying your processes and questions that we ask our clients as we walk through these processes. Okay, so the first manual process that we're going to review is building POs and receipts in Infor after go live as invoices and receipts are received. Okay, so in our experience, this is the most common process used by clients that choose not to do a full conversion. So the problem, of course, is going to be that you are not saving any effort. You're just shifting when you need the resources to be needed, okay? So the AP team could just be sitting there waiting to enter invoices until the buyer has the availability to create or update the purchase order, and then the receiver's waiting to receive the goods and process the receipts. So this could result in payment being delayed and the vendor putting your account on hold, okay? Another manual process is working in the legacy system to validate the three-way match. So this option is typically going to be a drain on all resources involved. So users need to utilize both the old and new numbering schemes, okay? So if the invoice doesn't match exactly, then the messaging will have to be done external from the system. And so there isn't going to be this audit trail captured, which is a great benefit that V11 offers, is this audit history of any time anybody changed a record or went and viewed a record. Now you won't have the ability to use that. And again, it could cause a delay in processing your invoices, which can result in being put on hold by a vendor. And then you're also just going to need a process to manually reconcile the received not invoice balance to bring into Cloud Suite financials every month. Okay, so what is that process going to be? And then the last manual process that we identified is just working from spreadsheets to validate, a three-way match. This is another option that's done frequently by clients and has the same challenges as working in a legacy system, with the exception that now you have your distributions already mapped. But it also adds the additional risk that a file could become corrupt, or users won't actually update the sheet, the spreadsheet, as they use the receipt. We're all familiar with human error, so it could happen by selecting the wrong line if you are actually going in and managing a spreadsheet. And then ultimately, it can make it difficult to calculate the true remaining balance for the R&I liability, doing it off the spreadsheet. Okay, and so as I said, I am a supply chain person, but this is where I'm going to put on my finance hat, and we're going to talk about some of the financial impacts this has as well. So your perpetual inventory valuation, typically financial balances are converted, and that would include inventory balances. However, as we've talked about, inventory cannot be loaded into Cloud Suite or inventory receipts converted without creating entries into the GL. So you need to develop a strategy for converting and testing this throughout your project, okay? So we recommend that the inventory GL balance is validated by finance before the system is turned over to supply chain users for processing, okay? That would ensure that the inventory valuation, after you've converted the open POs and receipts and then loaded your physical inventory into the system, that your inventory valuation ties to the GL before processing begins. So it is extremely difficult once processing begins to identify the transactions that occur due to conversions versus day one of processing, okay? And then another financial impact, the received not invoice liability. So not sure if everyone on the call is familiar with how this balance is calculated in Lawson or Infor, but so for inventory items, inventory receipts debit the inventory account and credit the R&I account assigned to the match company when the receiver is released and the inventory is journalized. So this is when you perform the IC-130, if you're familiar with S3. The liability is then relieved when the invoice is processed. For specials and non-stock items during the purchasing close process, an accrual entry is created that debits the expense and credits the R&I account. This entry is created as an auto-reversing entry that will reverse the following month, okay? Then during the next month close, it'll go through the same process again. We want to note service items, which are not goods, are not received and will not impact your R&I liability, okay? And inventory. So inventory has to hit the inventory account upon receipt and credit the R&I, because an inventory item, by the time AP gets the invoice, could have already been expensed and distributed out to the users well before you've actually paid for the goods. Okay, so just some information about the R&I liability. So we want to make sure that we define the best processes for ensuring the conversions will reflect what the ledger balances were prior to go live, or, big deal, determine the acceptable variance with explanations for the auditors if the need should arise, okay? So as an example, if my R&I liability is $2 million at the end of the period in my legacy system, and I don't convert everything over into the new system, and then all of a sudden, my liability in period one has dropped by $1 million, I don't know about you, but that is probably going to put up a big old flag to the auditors that something drastic, that drastic of a difference is a big deal. So understanding what is an acceptable variance certainly will come into play. Sometimes there's going to be some really old R&I items that go way back. Maybe they're smaller dollar amounts, and the level of effort it would take to clean it up doesn't offset anybody's time to go in and actually do that. So at that point, you would want your finance department or auditors to give you the okay that, a set dollar amount of change is explainable And this can be documented ahead of time. So there is, when we go back and reference this, we have explanation as to why there is a variance in our R&I, okay? So the discussion just needs to be had. So in conclusion, so some of the big takeaways from this session. So we want you to discuss and define a conversion plan early on in the project, okay? We would like you to define the scope of conversions and communicate with all users. This will give them time to see where they need to ramp up their resources, okay? Rather than it being go live and not knowing that you'd need all these people, extra resources on the project that you didn't expect, We also want you to build time into the project plan to allow for testing and validation across the suites. And of course, we would love for you to start beginning cleanup as soon as possible to minimize issues. If you're starting to test early, you can quickly identify how much data cleansing is going to be needed, and then you can start to get a team to tackle that. And I'm not sure if anybody on the call or if everybody on the call is aware, there are these monthly CUs. So they're cloud updates that happen every month, and they are fixing a lot of bugs possibly in the system. But what happens is something could also break in the process, okay? So if you're testing your conversion process through several testing cycles, there's a good chance that if something is broke during a CU and you put in a ticket with Infor early enough, they can get that resolved before you head into go live, or they can help provide you with a workaround so that you don't skip a beat at go live. So definitely want to take that into consideration. And so it's very big on this slide. We cannot stress this enough that the emphasis on collaboration between finance and supply chain should be done throughout the project, okay? So like I said, I've been working with my counterpart, Lisa, on this process. She has a real passion for this topic. It made me have a really big passion for this topic as well, because no one wants to be responsible for the burden of unnecessary work on another department. There is no one way this can be done, and we have to work together to ultimately ensure that we have the proper financial statements. So, make sure to have these discussions with people in the department so that they know the decision that was made and how it's going to affect them, and just be very transparent with them. From what I've seen, people can get very creative and clever when wanting to get their job done. For instance, I was with a client, and the warehouse clerks were tired of stopping and starting the receiving process for these legacy POs that weren't converted into the system, and I can understand that. They're used to just cranking the receipts out, and now they're having to stop, get somebody to help them, and the pallets of products started to stack up, okay? And when you walked back in the warehouse, it looked like they were very behind on receiving, okay? So they were receiving with a handheld, okay? And there is an option when you use mobile supply chain management, there is a button called Miscellaneous Receiving. And that is where you do not have to enter a purchase order and select the items to receive. So it just creates this miscellaneous receipt so that you could just track an item getting delivered to an area. So they, didn't really understand what miscellaneous receiving was. They just knew that they were just typing in the purchase order, saying they got items, and off the goods went to the department, okay? So they were not truly getting received and affecting inventory. So we didn't discover this until we started getting lots of invoices coming in, and the AP team couldn't enter them in the system because we'd look up the purchase order and either the PO wasn't even built or that item was never received in that purchase order. So what did we do? We went and asked the vendor for proof of delivery, which they could give us. And then just doing some research, we found out what was happening in the warehouse. So you just don't know sometimes what the fallout is going to be if you don't communicate and make a clear decision. And again, be transparent with all parties, okay? Because everyone should know how this decision affects their job, or you might run into the situation that, I experienced. So all of the options that we looked at today can be used and can be successful, But the key to that is just, again, planning it as an organization and staffing, appropriately. Okay. So with that, I know I covered a lot of information, but does anybody have any questions or comments with the options or what we've talked about today? Or does anybody have any experiences they'd like to share with doing conversions themselves? Or is anybody going through the process right now or preparing for it? Do they find this beneficial as maybe you prepare for an implementation?
It's Mario. I found your presentation to be excellent as always. One thing that I'm sorry. One thing that I again support you very strongly is the working together. Past history over the years has always shown a discrepancy between finance or AP and purchasing, and the unity of getting them to work together will definitely help the process move along faster and better. But you've covered every angle very well. Nice job.
Yeah. Oh, thank you, Mario. You're right. The unity. And, obviously you're like the nicest, easiest guy to work with. So I know you don't have that problem, but, there is always this disconnect between finance and supply chain. And I think it really is just because neither side knows what each other do. And they don't know when I do something on supply chain, how it's going to affect finance and vice versa. What does entering an invoice without a purchase order, what does that do on the finance side, or how does that affect their job? And I just think you're right, like just communication and just getting them together in a room to talk this out, I think would solve, a lot of issues, and maybe smooth over some preconceived ideas of what each area does. So great. Well, any other questions or comments out there? All right, well, I will hand it back over to Dave to talk about some upcoming webinars we've also got. Hey, Dave, can you hear me?
I was on mute, sorry.
No, that's all right.
Hey, as I was saying, that was a great session. Thanks, Casey, for presenting, and thank you all for attending. If you enjoyed today's webinar, we hope you'll consider attending the next scheduled event, which are next Friday. Next Friday, we'll be presenting the following webinars: GHR Absent Management Overview and a Beginner's Guide to IPAs Part 2. If you're interested in attending and want to register, you can visit our website or email brian.waters@balesllc.com. As a closing thought, we wanted you to be aware of our Coffee with Consultants offering. If you have any questions about what you saw today or any questions related to the Infor products, please reach out to us via our website. We'll connect you with a consultant who will spend a half an hour with you at no charge over coffee or tea or whatever your beverage of choice is, and we'll answer any questions related to your Infor system. Again, thank you for attending and have a great day.
Thank you.